investors are fleeing global markets following the devastation in Japan. Our next guest has found several investment pearls that could help you cash in on the long term. John Thomas is a global finance expert and the publisher of Diary of a Mad Hedge Fund Trader. He joins me now from San Francisco in an exclusive interview. And so many questions, but just really quick overall here, John. You say that Japan could be a true opportunity for some folks. Why?
We're about to see a big V develop in the economy in Japan. Economic growth there is flipping from a plus 2% rate to a minus 3% rate. That's a flip of 5% that happened virtually instantly. And that is going to create some great investment opportunities for the nimble.
And we're looking at some of the names, Canon and Nissan, Toyota. Let's talk about the overall economy. We did see a lot of interest. Inflows were kind of big into especially Japanese ETFs by American investors. Was that a short-term phenomenon, or do you think that investors are going to stay?
Well, exactly. You know, we had the panic sell-off, which took us down about 20%. We've had the dead cat bounce, where we made back about half of that. But the selling isn't over. There are a lot of people who are very concerned about the Japanese economy for the long term. So I think the astute investor here sits back, uses the volatility to his advantage, and uses the big dips to pick up the best quality Japanese companies. You
know, John, I had another guest on the show talking about the rebuilding efforts that are going to have to take place in Japan, and that so many things that, especially their infrastructure, is going to have to be replaced, but that creates opportunity, not just with stocks, but also for their economy overall. We'll actually see the Japanese economy grow. Do you agree with that assessment?
Oh, absolutely. The latest damage estimate that I've seen has losses at about $300 billion. That's about 6% of Japan's GDP. If you add that back into Japanese growth over the next several years, Japan could have one of the best performing developed country economies.
Are you concerned about the repatriation of the yen? I mean, what do you think is going to happen, especially with regards to the Bank of Japan, and what do you think they're going to do?
Well, I think we're getting the last dying gasp of a 14-year bull market in the yen, and that we're going to peak out here somewhere. The G7 has already made clear their commitment to stabilize the yen around these levels. And if the Japanese government allows the yen to go much higher, it could end up causing more damage to the economy than the earthquake or the tsunami did. So I think we can expect a lot more aggressive action on the intervention front from the Japanese central bank.
Real quick, any effect on the dollar?
No immediate effect. There is not going to be a large-scale sale of U.S. Treasury bonds, as many people fear. Currently, Japan has $886 billion worth of Treasury holdings in their reserves. But my sources tell me that there's no interest in selling any of those bonds whatsoever. You know, any reconstruction that's going to take place is going to be domestically funded through Japanese government bond issues or through the spending of cash reserves, which are quite large in Japan right now.
All right. And John, we should point out that you do not own stock in any of the companies that you did point out for our viewers. John Thomas, publisher of Diary of a Mad Hedge Fund Trader. John, thank you very much. Have a lovely weekend.